Hello, believers. Welcome to your monthly market update for November 2025. October turned out to be a strong month for Indian equities, not just because of index gains, but also due to the resilience we saw amid global volatility. Let's break down what drove the markets in October, what global cues are shaping investor sentiment, which sectors are likely to stay in focus, and what's the outlook for November. The Nifty 50 climbed around 4.5% in October, while the Sensex also gained in similar range, making it one of the best months of the year. This rally came despite foreign investors remaining net sellers, offloading shares worth over 20,000 crore, but their selling was comfortably absorbed by strong domestic institutional and retail inflows. In fact, SIP contributions hit record highs once again, reflecting growing domestic participation. On the macro front, the RBI's Monetary Policy Committee kept the repo rate unchanged at 6.5%, shifting its focus on controlling inflation while supporting growth. The good news is that CPI inflation has eased below 5%, giving policymakers breathing room. Corporate earnings were mixed. Banks, autos, and select industrials posted solid growth, while some mid-cap lenders and consumer-facing companies saw margin pressures. Overall, the tone from managements have been constructive, suggesting demand momentum is holding up post-festive season. Let's move on to the global cues. Globally, a big turning point came late in the month when the US Federal Reserve cut rates by 25 basis points on October 29th, signaling that inflation is cooling and the tightening cycle is nearing its end. That decision gave a strong boost to emerging markets, easing global bond yields and improving liquidity sentiment. Meanwhile, US inflation came in around 3% year on year, and growth data showed a soft landing trajectory. Oil prices, which were a concern earlier in the year, stayed range bound, with Brent mostly between 78 and 84 per barrel after the IEA warned of potential oversupply. This is positive for Indian fiscal math and inflation outlook. On the flip side, global risks remain. The China growth slowdown, geopolitical tensions in the Middle East, and volatility in the dollar index should still influence short term market moves. So, what's ahead for November? The outlook remains constructive but selective. With the Fed's dovish turn and India's macro stability, equity flows should stay supportive, though market may consolidate after October's rally. Investor will closely watch upcoming US CPI data on November 13th, India's IIP and inflation numbers, and commentary from ongoing Q2 result announcements. If earnings momentum continues and global liquidity improves, Indian market could aim for new highs by year end. Let's now talk about the sectors that could lead in November. Let's see the chart first of Nifty 50. Support is placed as 25,700 while resistance lies near 26,100 level. A break below support could drag the index towards 25,300, whereas a breakout above resistance may lead to new all-time highs, with momentum likely to sustain through the rest of the year. Next is Nifty 500. The broader market index has broken out of a falling trend line on the weekly time frame. Prices may retest the breakout zone or consolidate before resuming the uptrend towards all-time highs. Major support is seen near 23,300. A break below this level could turn the outlook slightly bearish, while holding above it keeps the tone positive. Next is PSU banks. This space has been the star performer. The PSU Bank Index surged over 8% in October, backed by improving asset quality, strong credit growth, and government push for consolidation. Expect momentum to continue, though valuations are gradually catching up. Technically, the index is trading within a upward sloping channel with strong support near the 8,000 level. As long as this support holds, the upward momentum is likely to continue towards the 8,500 mark. Next is auto and auto ancillaries. October's festive season saw record vehicle sales, both in passenger and commercial segments. Companies like Maruti, Tata Motors, and Mahindra reported double digit growth while EV adoption continues to rise. Auto remains a structural play for the next quarter. The index has been consolidating within a range for past 2 months with resistance near the 27,700 level and support around 26,300. A breakout on either side of this range could trigger strong momentum in that direction. The next sector is metals. Metals rallied on hopes of global recovery and domestic infrastructure demand. Government capex continues at a healthy pace, which should sustain order flows for metal companies. Technically, the index has broken out above its all-time highs and is maintaining strong upward momentum. The rally could extend towards the 11,200 level, and any dip from the current levels may offer a good buying opportunity. Moving on to the last sector, which is IT sector. IT has seen some correction, but valuations are not reasonable. Management commentaries suggest steady order books, especially in cloud and AI related projects, making selective IT names attractive for long term investors. Technically, the index has broken out of falling trendline and is now consolidating within a range. A breakout on either side could trigger strong momentum in that direction. Let's talk about what are the key takeaways from this earnings season. Earnings season will remain the biggest catalyst through November. Investors should focus on companies showing consistent demand, margin resilience, and strong cash flows. Those are the names likely to outperform in a range bound market. To sum it up, October gave the market a solid foundation, and the Fed's policy shift adds a global tailwind. If domestic macro data stays stable and corporate earnings continue to hold up, November could extend the bullish momentum, albeit with some short term volatility. Stay diversified, focus on quality, and keep an eye on global cues because November could well set the tone for how market closed 2025. That's all for this month market outlook. Thank you.